Everyone's talking about selling America, but what if they've got the story completely wrong? Okay, let's dive into this. So, is the US dollar dying? I mean, that's the question you see everywhere, right? It's all over the headlines, and honestly, it's causing a lot of anxiety. Is the dollar really in a death spiral? Is the rest of the world just done with it? But what if everyone is looking in the completely wrong place? What if this whole dramatic story, this whole end of the dollar narrative is just built on, well, a huge misunderstanding? The truth might actually be hiding in plain sight. You just have to know where to look. All right, so let's talk about the Sell America story. It's this popular narrative that's really gaining steam. The whole idea is a trade, right? And it's all based on this one core belief, that the US dollar is collapsing and everyone's running for the hills. And on the surface, the evidence looks pretty convincing. I mean, you can see why people are buying into it. The charts that everyone's looking at seem to back this story up, big time. Okay, so here's Exhibit A for the prosecution. The big one everyone points to, the US dollar index, the DXY. It just hit a 3-year low. Seems pretty damning, right? You'd think, okay, case closed. But not so fast. This brings us to what I'd call a tale of $2. We're about to uncover the data's big illusion, because this is where we really need to dig in and look a little closer. That DXY index, it creates this powerful illusion, and we're about to see exactly why that one number is giving us a really, really skewed version of the truth. Okay, here's a way to think about it. Judging the dollar by the euro, it's like judging an entire orchestra by its lead violin. Yeah, the violin is important, it's loud, you definitely notice it, but it's not the whole story, is it? You've got brass, woodwinds, percussion. Judging the entire symphony on that one instrument would be a massive mistake. And this right here is exactly why that orchestra analogy works so well. Take a look at the composition of the DXY index. It is not a balanced view of the dollar. Not even close. It's completely, utterly dominated by the euro. We're talking more than 57% of the entire index. That's basically just the violin. So what does this mean? It means we're looking at two completely different views of the dollar. If you look at the dollar versus the euro, which is basically the DXY story, you see this dramatic plunge. But if you look at the dollar versus the world, the real story, you see something way different, just a modest correction. Let's zoom out and look at a broader, trade-weighted index, one that actually represents who the US trades with. What do we see here? Is it a collapse? No way! It's a modest correction. The dollar peaked way up here around 130 back in January 2025 during all that panic, and today it's sitting around 121. It's just coming down from an extreme high. So this isn't some death spiral. It's a mini cycle. Let's look at the dollar's recent journey. Back in late 2024, it spiked because of extreme risk aversion around the world. That spike peaked in April 2025. And today, it's just retracing the worst of that spike, coming back down to pre-crisis levels. This is normalization, folks, not a collapse. Okay, so if the data is pretty clear on this, why did the story spread? How did this Sell America thing get so popular? Well, the answer has a lot less to do with economics and a lot more to do with emotion, politics, and momentum. Let's look at the anatomy of how a false narrative like this is born. It starts simple. The dollar just normalizes off an extreme high. But then, partisan politics gets a hold of it and spins it as a total collapse. That sparks emotional investing. FOMO kicks in. And finally, the momentum traders jump on board, creating this self-fulfilling prophecy. It's a powerful but totally misleading feedback loop. And you see this from all sides. As the analysis points out, quote, both sides do this. Republicans claimed it was weaponizing the dollar. Democrats are all over the place saying trade wars are forcing the rest of the world to sell. Politics is a huge driver here. It doesn't matter who's in the White House, the other side is going to use it to score points. And the end result of all this political noise and momentum? The euro has become completely detached from economic fundamentals. Traders aren't looking at interest rates or economic growth. They're just piling in because everyone else is. It's a pure momentum trade. And that brings us to the really critical part, the Wile E. Coyote moment. What happens when the narrative breaks? What happens when a market is running on nothing but a story, and then that story just stops? Because as the source material says, the euro is way out of whack with everything else. Seriously, when you look at it, the euro is just sticking out like a sore thumb. Its value is totally out of sync with other currencies, with economic reality. It's basically floating on air. So what happens when the market looks down? You know that classic cartoon moment, right? Wile E. Coyote runs right off the cliff, keeps his legs churning in midair, and he's totally fine until he makes the mistake of looking down. So what happens when this market looks down? Yep, it's called the Wile E. Coyote moment. It's that instant a market realizes it's been running on a false narrative, leading to a sudden, violent crash as it reconnects with reality. It's that moment of pure panic before gravity kicks in. And for the euro, which is being held up by nothing but the story, that could be a very, very long way down. And it might not even take that much to trigger this reversal. It could be any number of things. Maybe major trade deals start to fall through. Or maybe risk aversion just comes flooding back into the market. It could be renewed signs that the global economy is getting worse. Or maybe the Sell America story just runs out of steam. Any one of these things could be the pin that pops the bubble. So, let's bring it all home. Narrative versus reality. What's the crucial takeaway from all of this? Why does any of this matter to you? It's pretty simple, really. The crucial point is that markets can run on stories for a while. A good story is powerful, it can move a ton of money. But eventually, reality always wins in the end. The fundamentals will reassert themselves. So that leaves us with one final question to think about. In a world that is just full of noise, what should we trust? The popular story everyone is telling, or the hidden numbers? Now, if you want to dig deeper into this, you can find the original source of the analysis right there in the description of this video. And hey, if you enjoyed this explainer, please follow, like, and share the podcast What Bitcoin Taught Me, and follow us on Twitter/X, Nostra, Blue Sky Threads, Instagram, Facebook, LinkedIn, Spotify, and now YouTube.